This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, Zinger Nation? It is Thursday, August 24th. Slightly different camera angle today. You like that, guys? We're switching it up on you. Keep you on your toes. I got my man Nick Brown hanging out backstage. Gonna talk some headlines. Of course, yesterday the biggest news was Nvidia's earnings report came out after the close, and the report was great. And the stock, skyrocketed, went up past 500 for the first time, went to like 520. Let me pull up the chart here on Benzinga Pro, but those gains are not holding today. Nvidia has traded back down, still up, but a little bit less than 2%. And a lot of people thought, okay, Nvidia's earnings report could carry the Qs, could carry SPY, and kind of, save everything. And that doesn't appear to be the case. It looks like the market had kind of already priced in a strong earnings report from Nvidia, and in fact is actually selling off a little bit. So that just goes to show you, if it seems like it's something obvious is about to happen, like Nvidia reporting a great report, and then this is what happened last time. I mean, the Qs were up, I want to say 2-3% the day after. I guess here, let's look right here. We can see, because Nvidia had this huge spike up its last report. So May 20, what was it? May 25th was the day Nvidia was up 24%. May 25th. Let's go back to the Qs, find that on there. And yeah, May 25th right here. Qs were up 2.4%, which is a monster day for the Qs. 2.4% is like, going to be always in the top 5 best days of the year for the Qs. If you have calls on the Qs and the day the Qs are up 2.5%, you're caking. You're making some serious money. So that's what happened last time Nvidia reported. And the expectation was for something similar this time, for Nvidia to report and maybe kind of carry the rest of the market. And again, right after the report, up 8%. Nvidia was trading at $520. We're currently at $480. So Nvidia has gone off $40. That's about 8% of Nvidia's market cap. That's been erased from after the close yesterday. And you go over to the Qs today, and we're down 1.4%. Looking at the 5-minute chart, you can see right here, this is the open this morning. Right off the open, we came down to 370, but we weren't done going down yet. No, we slipped again, now all the way down to 365. And you can kind of take this a couple different ways. We've got Steve Kalyjian hanging out backstage, so I'm going to bring Steve on, get some of his thoughts on this. But, I think, a bear could look at this and say, okay, this is a sign the market is overbought, that we're due for a pullback. The fact that Nvidia reported great earnings and the stock isn't even trading up that much, and let alone the fact that Nvidia is not trading up that much, the market itself is now trading lower. But if you're bullish, I don't think this changes that much. I think you could say, okay, yeah, this could be a little head fake. This could be, just some froth getting out of the market, and we're still going to be fine. The economy is still fine. But from a chart perspective, this does not look pretty. Starting to look a little, head and shoulders-y for sure. I've said, the past few weeks, I've been saying that, we're due for a pullback here, and that, neutral in the short term to bearish, but in the long term, views still unchanged. Let's see what my man, actually looks like he just walked away, but whenever Steve Kalyjian is back, we'll bring my man Steve on, see what his thoughts are on this, on Nvidia's move and the other crazy market moves. And then we will be talking to Rob Roy in a little bit. And like I said, we've got Nick Brown for lucky us one more day. All right, Steve is back. Without further ado, let's bring Steve on, see what he's thinking. All right, Steve, how you doing? It's been a
Hey,
couple
Aaron.
weeks, but
What a day, man. Wow. What a
yeah.
day.
Well, I mean, we're getting crushed right now. Q's down 1.4%.
Yep.
SPY down. Dow is down. Everything in the red. You think we're gonna keep moving down?
I think you get a bounce here, but the funny thing is, so this morning we had nothing but sell divergences. I called shorts in Google above 134, Oracle above the 119.5, Microsoft, Amazon, Tesla, the Qs. NVIDIA last night, I was jumping out of my skin when it was trading 518. If I was live with my audience, I would have said I would look to sell this thing. This thing rallied 101 points since Monday's opening, right? And you have gigantic gaps. Now, I knew we had the buy reversals yesterday in the video week, and a lot of people bought into the earnings because everybody's reading they're going to be great. But there's an old adage, you sell on good news, right? So how much better can it get? You saw AMD, pre-market. Did you see some of these prices in pre-market? AMD was like above, I think, 13.5. Tesla was around the 41.5. Microsoft above 334. The Qs 373 and change. It was insane. And all I kept on telling everybody this morning was we have sell divergences on all these names. And I called out a bunch of shorts, and you looked, and they dropped, after we got the push down to 50 on the S&Ps, the push up to 68, and it was a sell divergence there, and we never looked back. We dropped 50 handles, 55 handles off the high there. So, I think the market is telling you I just think in the next several weeks we'll just be making lower highs going into October. I think interest rates are real. Yes, we had a nice rally in the 30-year bond market of 3 points, so that alleviated rates on the 10-year. I think rates are going right back up here again. I think if anybody is fooling anybody, the people in America are being fooled. Inflation is staggering. Rental property staggering. Gas prices are over $4.30 here. I've seen gas prices in Florida go from $3.20 to $3.25, almost up to $4.25 in some stations here. That's $1 per gallon in the state of Florida. In New York, it's higher. In other parts of the country, it may be higher as well. Inflation is not coming down, and I just don't think the Federal Reserve has a handle on inflation. Yeah, the CPI number came down from 9 to 3%, but I don't even believe the 3%. I think the number is still around 6%. Food's astronomical. You go to grocery stores, all I hear is people in the aisles just complaining and putting things back. 61% of the people in the United States live paycheck to paycheck. This is not good times in my book.
Yeah, I think certainly and I've talked about this on the show in the past couple weeks, the recent increase of gas prices is something to watch for. I'll pull up the map from AAA. You can see right here the national average 383 right now, and that is up from a month ago of about 360. So definitely a significant increase in there. And as well, you have the diesel price that's increased significantly, with the regular gas, and that's a big problem because the diesel price is what's used. Diesel is used more for trucking and
yeah, that just carries forward to any goods that are being produced, and it just passes on the increase to the consumer.
Yeah, and so there are a few things. I think that if you're watching the economy and not the market, there are a few things like you mentioned, Steve. The housing market, things like this, the gas prices. But I think for people who still remain long-term bullish, you could turn around and say, "Hey, Steve, even if inflation doesn't come down, that means that's because people are out there still spending money."
Yeah, but you had the highest. I read yesterday we have the highest consumer debt ever. Right now, the average person owes more than $10,000 per person. That's astronomical, and people are living on their credit cards because, and the defaults are through the roof.
Well, so there okay, so there are a few things there, and I will say, just anecdotally, and the data's there that credit card debt, whatever, has increased. I have heard from multiple people in my personal life that they're like, yeah, I'm gonna start cutting back on some spending and pay off all my credit cards and stuff like that. So I have heard that. So that has been something that has gone into as part of my, like, okay, I'm not as bullish in the short term. It does seem like there might be some cutting back of spending to pay off those credit cards. But what I will say to this point, because I've been seeing a lot of this about credit card debt as a country has hit new all-time highs, and that's definitely a scary headline. But the other side of that you got to think about is that's just what's going to happen naturally, right? So as our economy expands and there's more people and people are spending more money, like the amount of credit card debt is always going to increase, right? So if there's, say 100 million Americans out there and the average net worth is, $1,000 and people are carrying credit card debt, and that number of people increases, the amount of money that those people have increases, what's going to naturally happen is the amount of debt. So what matters more is, I guess, like proportional. How much debt are people carrying proportional to their net worth? Because again, as the economy expands, as more people enter the workforce and start making money, what's naturally going to happen is that credit card debt is always going to expand. So the fact that it crosses $1 trillion for the first time could be a really bad sign, but it could also be something that's just, was always going to happen as the economy expands.
And the other thing is you can't ignore 61% of people live paycheck to paycheck, and that's terrible.
Yeah, I mean, I haven't looked at some
I'm
of that.
not an economist. I'm a realist, and I see things for what it is. And when I go through a supermarket and I hear people, complaining about the price of milk or eggs or bread or anything, meats for that matter, it's just really concerning. And I just shake my head because, like you say, fuel trickles down to the consumer, right? Because whether they're spending extra money in the gasoline pumps, or when the people with the truckers have to pay more money in diesel, they just jack up the price. They got to get paid. You want your goods or services, and okay, well, the consumer will pay for it, I guess. But in the end here, I just think that, like today, just one of my guys texted and said that they think the Fed's going to be done raising rates. I don't think so. Now, again, we're off. The S&P's dropped about 280 handles off the high. And I just think we're going to make lower highs here. The big number to watch is the 4250 handle on the S&Ps. You take that out, you got a negative trend on the weekly now. So you're going to have some underlying strength here between 4250 and 4350. If that breaks, you're going to fill all those gaps below the market down to 3750 on the S&P.
Yeah, let me pull this chart back up on Benzinga Pro, and I mean I really think right now you don't have to with the charts, and Steve, you can tell me if I'm wrong, but I don't think you gotta do anything crazy or have any crazy indicators. I think just looking at the chart, if we start making here we go, let me get this pulled up right here, since to me it's looking kind of head and shoulders. If this would be the left shoulder, head right here, right shoulder right here. I mean, if we break through this like 430 level on the SPY, that's acting as maybe some support or resistance right here, that to me that it's kind of like, all right, no brainer.
Okay, then go down a little lower. Go down right up right there. No, go down if you can. I don't know if you can see my mouse. Go down like right here. Go down just a little bit more, right there. Look at that gap right there. You take that, you're going right down. That's the first target right there.
Yeah, I mean, and I'm not, I mean, we're only $20 off there, so a bad week next week could
that's 1,800 points on the Dow.
Yeah, could get us there, but I'd be a buyer down there. I think, Steve, around 420 on the SPY. I think maybe
you got gaps. You got gaps going down as like the 275 on the Qs. So I'm just telling you, anyway, I don't know if it's going to get there this year, but it may go down there next year, because even if they cut rates next year, that's a sign we're in a recession, and that's not good.
Yep. Well, again, Steve, we'll just have to watch this, inflation story, all these things. I do think, and I don't have the data right in front of me, but from you can't really fairly say that there hasn't been any progress made on inflation. I mean, unless you just think that all like the CPI numbers and all that are bullshit, which I personally don't. I understand there might be certain areas where it's hanging on and it could be ticking back up right now, especially with those diesel prices. But it does seem like we've
I
made
mean,
at least some
9% was an extreme, and 9% really hurt people, and they had only one place to go but down. But when you look at the number and they exclude food and energy, I mean, come on, the number's got to be north of 5-6% still, if not more.
Yeah, and I mean, again, I'm not saying that it's still not a problem. People, like
Yeah.
you said, are still paying more at the grocery stores. But I mean, I've even noticed when I go grocery shopping now, like I've been seeing a lot of the yellow stickers on the shelves saying that there's like a sale. It'll say like buy one get one 50% off or something. So I've been trying to use more of those deals that I'm seeing out there, but definitely needs to improve a little bit before.
I mean, before you go, I just saw milk here, a quart of milk, $5.29. I mean, that's unheard of. I used to be $2.99 for a quart of milk.
Yeah.
$2.79.
What part of Florida are you in, Steve?
Jupiter.
Okay. Yeah. Well, yeah. I mean, I guess it all depends. I think like right now, for people that are still getting hurt out there by grocery bills, try to save money where you can. Look for those deals. Maybe if you usually shop at a more expensive grocery store, I've been going to an Aldi's, which has been a little bit cheaper. So, but yeah, Steve, Publix is great. I love Publix, but
amazing. It really is. Great people, great people there that were they really take pride in their everyone I've been to. It's just really
you can tell when companies like really take care of their workers, pay them a living wage and stuff like that. And it seems like people really enjoy working at Publix. Great food. Love it. I only go when I'm down in Florida. So Steve, next time I'm down, I'll hit you up. Maybe
I'll take you a nice Italian place.
All right, let's do it.
All right, Aaron, great. Thanks, everybody. Have a great weekend, everybody.
Thanks, as well, Steve.
Be well,
of course,
brother.
always. We'll talk to you next week. All right, guys, that was Mr. Steve Kalyjian. Always good catching up with Steve K. Sorry, I like something stuck in my throat. Let me take a sip. Sorry, Nick. 1 second. How about the price of pork up 100% since the first of the year? Well, I guess maybe we should have been investing in pigs then. We should have just been buying pigs. I don't know. I can't. Let's try to find US CPI gov. Like I mean, I have a feeling this is not going to be. Oh, you can see right here. Okay, so 12-month change increase. So food is up for. Okay, so food at home is up. So that's groceries 3.6%. 12-month percent change. Food away from home up 7%. Break it down a little bit more. Locations. Action. Food. Groceries. Oh, nothing. I don't know. I mean, I'll have to go through this data and see just how bad the inflation is in food. Let me bring my man Nick Brown on, see what Nick's been watching. I'm seeing pork down, eggs down a lot. Jay, where are you getting this data from? I know it's readily available. There's just so much stuff on the website that it's hard to find sometimes. Holy shit, 67 cents a dozen. See, Jay, I do appreciate Jay Rice. I mean, Jay, I think it's really easy for a lot of people to kind of like ignore facts when they don't fit someone's I don't want to say someone's narrative. I don't really, whatever. But a lot of people, I feel like that were complaining when, when inflation was going up a bunch, will then not point it out when it goes down. So at least, Jay's being very, like 67 cents. It's just crazy. I mean, how many news stories were they're out there about egg prices when they were whatever they were, and how much were people talking about eggs on CNN, Fox, doesn't matter what type of media it was, whether it was left, right, etc. Like people were talking about all about egg prices, and now that they're 67 cents, no one's going to talk about them, and it's just going to be like, okay, I'm sure if you ask someone still, because of the media they've taken in, they'd probably still say eggs are expensive, despite the fact that it's probably not true anymore. We should do another follow-up on that and talk about exactly why and how the price of eggs have fluctuated so much. Kevin saying was at Sam's last night and there was not bacon on the shelf. Paid $19 3 weeks ago and they had to sign up for $24. Yeah, I don't know. I mean, I think if you look at the type of wage increases that we saw, like at certain points during COVID, when the labor market was really tight and people were like able to essentially like, like quit their job and find a new one the next day that was paying 20% more. Like I think that was a little bit more widespread. I don't think big, I don't think huge, wage increases at UPS or AAL, like two specific companies, will really be enough to drive inflation higher. I also don't know. I think, you got to go into the real stories and stuff, because when you see the headlines like UPS drivers now making $48 an hour, like when you go into it, it's not really like, okay, every single UPS driver is going to be bringing in like 100 racks now. That's not the case. Like you look into it and it's like, okay, if you're a union driver that's been there for this many years, then you're going to be making $50 an hour. So I don't really think that, and I think too, I mean, you got to realize like I don't know. I'm kind of speaking without looking at the numbers right in front of me, but from what I remember from reading these stories, like you're talking about now that like a lot of people are going to be making, maybe 100,000, 100. It's like not going to be like all these guys are going to be making like that's for a lot of people in America. If you're working in tech or whatever, like these tech companies employ way more. Well, actually, UPS probably has about 60,000 employees. Holy shit. UPS has 400,000 employees. All right. I don't know. Jay, that's a good point. I'll look into I'll see, I don't know. My gut sense wants to tell me that UPS's like new contract alone isn't going to be enough to drive inflation higher. Just based on like, I doubt the company would have agreed to it. It's not like everyone's getting 100% salary increases, basically, is my point. I think like, but that is significant. So it's a good thought process, I think, and I'll look into it. Maybe the economic impact. I'll figure out a way. Yeah, I mean, $13 a dozen for some eggs. You can't base anything off that because that's obviously going to be such an outlier. That's like me talking about, well, I got gas for, like if I were like, oh yeah, Trump is great. I remember when Trump was president, I was buying gas for 80 cents a gallon. Like, yeah, that was like right on the onset of COVID when no one was driving anywhere. I can't remember. I do think there was like a specific time where gas was less than $1 a gallon and I filled up like my whole car for 20 bucks. It was like amazing, but that was, again, not amazing times on the onset of COVID that drove gas prices down that much. But again, like when there's that much of an outlier, you almost just have to discount it totally. What the fuck? 30 to 40%. Hey, Nick. All right. Let's give Nick our special intro and see what headlines he's watching. All right, Mr. Nick Brown, how you doing?
Good. I was listening to your discussion with eggs and gas prices, and I'm in Pennsylvania, Pittsburgh area. We are starting to see prices recede here a little bit in food and energy. I know food for a fact. I know egg prices are coming down. Bread stuff's coming down. Gas still $3.89 in my area. It got as low, I believe, as $3.60, $3.68. But it is trending higher just a bit. We haven't reached over $4 just yet, but it's something to watch.
Yeah, I mean, again, like these inflation prices, so far we've been getting good news. Everything has been good. I think the recent increase in fuel prices has started to make some people worried again, and it will be certainly something to watch. But Nick, let's talk about, big news of the day, or at least big news
Nvidia.
of yesterday was Nvidia's earnings. A little bit disappointing market action today following a great report. I mean, what's been the news on the street?
I'm not surprised just because we've seen a lot of Nvidia stock is up significantly percent year to date, but a lot of the times is, I think analysts are just overreacting, and I'll give you that here in just a minute. But first, let's go over the numbers. EPS came in, adjusted EPS $2.70, estimates for $2.07, revenue 13.5 billion, 13.51 billion, estimates for 11.04 billion. Adjusted gross margin 71.2%, beat expectations of 70.1%. Gaming revenue 2.49 billion, estimates for 2.38 billion. Data center revenue 10.32 billion, estimates for 7.98 billion. They see Q3 revenue 16 billion plus or minus 2%, estimates for 12.5 billion. They approved an additional 25 billion in share repurchases. Data center revenue was a record. The problem is, yes, the report was great, and they mentioned AI 104 times on the call per my count. Just the street is overreacting. And I'll give you an example. Rosenblatt AB, they go from 800 to 1,100 for their price target. And they say, quote, Nvidia's epic print and guide 2 quarters in a row is simply unprecedented and it's just getting started. Dan Niles was on CNBC yesterday evening, could have even been this morning, but Dennis Dick mentioned this morning on pre-market prep. You cannot have a company that continues to beat and raise the guide every single quarter. It's just not possible. I mean, it is possible. I just don't see that happening. You cannot continue to say you're going to be 10, 15, 20, 50% above street estimates. It's just not common. And so eventually down the line, it may not be this quarter, it may not be next quarter, it may not be the quarter after that. But eventually down the line, there is going to be a miss somewhere, maybe a miss on EPS, maybe a miss on revenue, maybe the guide isn't that strong. But you cannot have a company that continues to beat and raise. There is going to be a miss down the line.
Yeah, unless you're Apple from 2010 to 2020, they were just beating and raising every single time. I mean, I agree.
But then a slowdown happened. Then it's important to note a slowdown happened for Apple because the latest quarter, they missed on a few metrics. And maybe it was expected, but they missed on, I think, the Mac or iPad or something revenue. They missed on a few key metrics.
Well, I'm not talking about currently. I'm saying there was like a 5-year stretch where Apple did essentially, and you, Nick, were probably, too young to be following the markets, but there was a stretch where, and I'm probably wrong, there probably was a miss or maybe not even a miss, but a bad earnings reaction at some point for Apple. But there was a time frame where it felt like Apple literally beat every single earnings and their guidance was always great. And they, they just was a killer. But
now they don't give guidance because of COVID uncertainty. There's a key metric there that they haven't given guidance since COVID. But now you see that they try to walk that back a little bit. They gave a little bit of a metric saying, hey, we may have 78 billion in some cells, but then they're like, that's going to fall below the street estimate. They're being very cautious. But here you have NVIDIA, and NVIDIA is the outlier just because I don't know any other company that has continued to beat and raise, and even last quarter raised significantly. And now all of a sudden they're beating and they're raising a little bit again. But I think you have to come to the conclusion 1,100 for a price target from Rosenblatt. I think that's going a little overdoing it. I think the analysts are just trying to chase the price here.
Yeah. And so it's like you said, I mean, like NVIDIA, like the expectation can't be for it to beat and raise guidance every single time. But, I think for a lot of people that are still bullish the stock right here, and I'm not talking about, bullish long term. I'm saying that they would still be buying the stock at 483 where it's at right now, saying, okay, like, I think it should be priced higher. Those people that are super bullish NVIDIA would probably tell you I know that Nvidia is not going to beat and raise guidance every single earnings report, but over the next, year or so, with this rise in AI and demand for everything, like they do expect Nvidia stock to remain strong. And I think the question is just now, like, how much of it is priced in? I mean, you look at this run from October 2022 to now, basically the last 9 months, Nvidia has ran from $100 a share to $500 a share. How much of this is, being priced in these last 9 months? Is this, are people, when people were buying at 400, were they priced in for this earnings report? So it'll just, I think, depend on what the overall market sentiment is, because there's a chance that if tech and growth weakens, from here, and there's a big sell-off in the queues and whatever, there's a chance that Nvidia gets to a point where it's like getting undervalued again. I'm not saying it's going to get back to 100. I don't think we'll ever see Nvidia back at $100 a share. I don't think it's ever going to get back to, half of where it's at right now. We're at $500 a share. I don't think it'll ever get back to 250, whatever. But I'm saying there's a point probably where it could get grouped in with the rest of growth and tech and slip to a point where it again would become undervalued at a certain point. So just something to watch. I mean, again, I don't want to take too much from today's price action,
But I mean, Dan Ives in a note last night, and for a quick reaction after the print, he thinks this is the time that tech's going to rally. They think after Labor Day, post Labor Day, there's going to be a tech rally into year end, and it's just not going to be Nvidia. It's going to be all tech stocks: Tesla, Apple, Microsoft, Netflix. He thinks it's all tech that's going to rally.
Yeah, I mean, and that's what I'm saying, is that, like, a lot of people, I think, would look at today's price action and say, oh, the Qs are trading down big after like a big report from Nvidia. That means, this is it. We're oversold. We're going to see a big, sell off. And I'm saying, I just don't want to take too much off of one day's price action. Is it like, significant to me, the fact that the market's trading down after a big earnings report from Nvidia? Yeah, it is significant. I think it's something.
Well, because we have yields higher. And that's another issue that a lot of people that we're trying to drill down on is yields are continuing to move higher, and everybody's just worried for Jackson Hole. I don't know if his speech is going to be 8 minutes tomorrow. And I mean, tonight we will get, I believe, a preview, or we will actually get his speech released tonight, an excerpt of it, or his rough draft may say, tomorrow. Will it be longer than 8 minutes? Will he send the market down tomorrow? I don't know, because you have to worry that there's other Fed speakers. Yes, we've had Harker this morning on the tape. We've had Collins in an interview on the tape, and there's more Fed speakers to come. I think Christine Lagarde from the ECB speaks at Jackson Hole Friday, 3 p.m. Eastern time. And then there's a few other Fed speakers, maybe not here in the U.S., but other members of the Federal Reserve, like from maybe Bank of Japan or the B of A. I think they're speaking over the weekend. And so there's like a lot of worry that with yields rising, that's putting pressure on U.S. equities. You have the dollar hovering between 2-week lows and 2-week highs. It's like fluctuating day by day, putting maybe some pressure on currency, the international markets regarding companies that do internationals. There's a lot of worries here with yields spiking, that all of a sudden yields continue to move higher. Yesterday, yields moved lower, market rallied, and now all of a sudden yields are higher again. I mean, I don't know what else to make of it. Is it just once we get Jackson Hole out of the way, we're going to be cleared and yields are going to stabilize and market's going to move higher? Do we get to 4,800, 4,825? I mean, is Jackson Hole really the big question? Is Jackson Hole going to set the tone for year end or even through this next FOMC meeting?
Yeah, I mean, the rates, what's going on in the fixed income world is going to supersede what's going on in the equities world always. I think, and so certainly gotta find out what's going on in the rates world. Someone just asked what my year-end price target is. So for SPY, I mean, this is just so tough because from it's August 24th right now, 3 months from now, 4 months from now, at the end of December. I mean, we could be in a recession, we could be boom. I have no clue. I would say my year-end price target would be like slightly higher than where we're at now. So I'll go 450. Let me put a reminder. I'll put a reminder in my calendar. 450, and I'll check how close I am. Because I think I think realistically, we could have a little sell off from here.
If yields move higher or continue to stay higher, then we're really talking about a sell off.
So it looks like the last trading day of the year is going to be December 29th, Friday. AB SPY price target 450. BZ Live 825. All right, so now I have a thing in there to check it, and I'll follow up with you, AH, if you're back in here. All right, wait, Nick, real quick, I got to go to Rob Roy, and then if you hang out in the backstage, we'll chat some more about the headlines.
All right, perfect.
All right, let's bring on my man Rob Roy. It's been a few weeks since we've talked to Rob, but if you're someone who wants to learn more about options, wants to learn especially about option spreads, Rob's got his own real cool strategy, and I love talking to Rob to see what he's been watching. So without further ado, let's go ahead and give Rob our special intro and bring him on, see what Rob's been watching. What is up, Rob? How you doing today?
Aaron, I'm good. How about yourself?
Good to have you back on the show. I know it's been a few weeks. It's been too long.
It's been a bit, yeah. It's good to be back. Thank you.
All right. What do you think? Obviously, like a lot of people were anticipating the tech to be rallying today off of a strong Nvidia report. Nvidia stock itself has sold off a lot from its highs. I mean, how much do you take this do you see this as a big red flag that the market's trading down, or you think it's not that big of a deal? It's just one day.
I think Nvidia was an overreaction. The pullback, I think there might be some traders taking it as negative, but I think we had an overreaction on Nvidia. We actually traded it this morning bearish once it broke the 494.36 level. It broke, retested, and failed. We were able to pick a trade up there. I didn't want it up at the 500. It was just too much confluence between these two fib lines, or the fib and the 500 level. So we waited for it to get down below a little bit before taking that entry. So overall, it was a good setup, but I'm not sure that we're overdone yet. I mean, as far as S&P goes, there definitely are some concerns that we have flipped into a bearish bias now on the S&P 500. Am I sharing my screen? I'm not.
Yeah, share. Yeah, go ahead and share your screen. I don't see it yet, but I mean, so, and is this going just based off the past couple weeks? I mean, we've been trading lower. Obviously, the market hasn't been as hot the past couple weeks, so you're starting to see this as we could be rolling over, getting toward a bearish bias, or are there other things outside of just the price action that has you concerned?
Well, obviously, everything that's going on from a reporting standpoint, the Fed's last announcement, the Fed meeting coming up this week, all of the CPI, PPIs, I mean, every one of them, it seems like we're on eggshells over and over and over again. And I think these things still lend themselves to be a stick of dynamite that could explode at any given time. Combine two or three negative things together, and, we're looking at some serious concerns. Is the Fed going to lower rates because of the presidential election? They don't want to one-sided where we go into an election and to buy a house on a 30-year fixture over 8%. Right? We haven't had that in just how many years. So I think there are some concerns as to where it goes, but I think we've got a different environment now, it seems, than we've had in the past when we've had these types of conditions. We've not seen a recession yet. We're still not seeing the recovery in the or getting more labor, and then seeing unemployment come down. We're not seeing any of that kick in yet. I did hear one report today say that there's concerns of holding up labor prices. That I can understand. Labor trying to keep up with that. What did I see today? Bus drivers, they were offering somewhere $24 an hour, $1,400 signing bonus for coming on with them.
Yeah, and Jay Rice brought this up in the chat earlier that UPS's contract, these wage increases could lead to higher inflation. And certainly if there's a big wage increase across the board for blue collar worker, I just don't know if like that's enough to like I don't know, like I think a lot of wage increase that we've seen that has helped drive inflation throughout the past 3-4 years from the onset of COVID has been not really from the blue collar types of jobs, and seeing seeing the UPS drivers or bus drivers getting paid more. I don't necessarily think that's going to end up being like a negative for the economy. I think if anything that could could end up being a good thing for the economy, and I think should be welcomed. I think, obviously the concern is that in the short term it helps keep inflation higher. But, I from everything, that I've learned in economics, the more the more money people have to spend, the more money then is going back into the economy. You have this multiplier effect, ends up driving GDP. Like all these things I think are positives. And the one downside of it is that it can help keep inflation a little bit higher in the interim.
Yeah, and I agree with all of that. We just always need to be cognizant that the increase in wages causes the business owner to raise their prices, like it or not. So the extra wages you got, you're spending somewhere. And I'm not saying they don't deserve the monies. I think there are way too many positions that are underpaid. The good thing for me is my one daughter will never leave New York. She's a teacher. She wouldn't go to a Florida because they don't pay enough money there. And so many other states just don't pay enough as teachers, right? I think it's our most precious asset in your hands, and we pay you, a very low wage to educate them. I think that there are some ones like that need higher wages. My cousin's an engineer for New York City, and they just negotiated their contract, and I think in 3 years they get 38% total increase over the next 3 years.
Some good negotiations.
It really is.
Rob, I got AH in the chat. Asked me my price target for the SPY right, for end of year. Do you have a end of year price target for SPY?
So I'm looking at two different numbers here because we're looking up and down. I don't have a good, clear direction of what goes on. Any one thing could tilt the scale. I'm never been one. Sorry.
I was just going to say that's what I said too. I was like, December, it's August 25th now, December 30th, we could be, in a recession. We could be, booming. I have no clue. Like really, so my guess is really as good as yours.
And it's just that a guess, right? But look, if we analyze what's going on with the chart right now on the S&P 500, we had this amazing move to the upside, just great trend up for the last couple of months. And we ran right into the high there at that 4,600 level, and then showed some weakness and have collapsed ever since. We broke down below our lowest moving average there, which for me is the 55 exponential moving average. We came back, retested, and we're playing in there right now between the 8, which is the pink line, the 55, the brown moving average, and then right here we've got a 4,400 level. There's a lot of confluence in there. If we violate that, for me, it becomes you need to crawl before you walk, right? I'm not trying to plan on a number for the end of the year. I'm looking at what's the steps. The first step is this recent swing low that we put in is going to be a short-term support if we do continue to push down. But ultimately, there's this dark black line down here, Ryan. It's Aaron, sorry. It is, I was talking with one of our coaches, Ryan, about this the other day. This 4181 level right here, this black line, that level is a Fibonacci line. That is a pure fib number. It is not related to this specific chart. It would fit on any chart that's in that $4,000 range. That key level, we have been back to that over and over and over again. When we hesitated on the way up, we hesitated right there. We came back to it 1, 2, 3, 4 times before we finally broke through. So if we do push to the downside, I would not be surprised to see the ultimate push. And yes, I think it could happen by year end to be that 4181 level. To the upside, I think we're going to have a problem retesting that 4,600 one more time. I don't think we make it back up that high again, unless something drastic happens that the Fed goes, you know what, we're going to start dropping rates next month. And we wind up back at 5.5% by the end of the year. Then yeah, I could see us having a nice climb to the upside, but I'm not sure we're ready for that just yet.
Yeah, there you go. And by the way, I mean, you can call me Ryan. My older brother's name is Ryan, so I've been called Ryan countless times.
Yeah, no. We have Ryan Mitchell is one of our coaches.
I'm used to it.
Co-author of Candlestick Charting Explained. Great book, by the way, if you guys don't have it, the latest edition. But anyway, we were having a conversation about levels the other day, and that's about this one in particular. It's 4181. So all good.
Yeah. All right. Well, let's see if we've got any other questions in the chat. Otherwise, Rob, any other charts you've been watching or things that you want to point out to us before I let you get on with the rest of your day?
Yep, I got a couple of symbols for you if you'd like.
Yeah, let's do it.
All right, so Apple right now, I like where it's sitting. I'll watch it after lunch and see if we can get a fail below that 8 moving average, a retest and a drop. We don't have a lot of room in there, but we've got a couple of dollars down to this 175.83 level, this purple line. And it may be a tomorrow trade. Now, it's not my favorite trade, Aaron, because the 8 is a little bit far away from the fib line, but it is a potential setup there, but not one of my favorites. We look at Adobe. Now we're talking one of my favorites. I mean, I love the structure that took place here. You could have traded the bearish trade today if you wanted to fight the overall pattern on Adobe, but we've gotten now below the 8 and the 21. It's sitting right at that 518.74. If I can get a small move down, a retest of that 518 and 3/4 and a fail, we're looking at 500 as support. And I probably would not let it get all that way down. I'd probably be looking at this 504 level just because we've been there recently, could not retest the 500. So I'd be a little bit more cautious there. Right?
Got it.
Number 3 is Costco. Costco already broke from when we started here today, from when I got on here today a few minutes back. We broke this 537.87, retested and failed. You're looking at 529.70. There's a lot of opportunity on these stocks. Obviously, we need the market to keep pressing lower. If it does, these are where I'm going to be looking for today and into tomorrow. You guys have my entire list for tomorrow right here. Goldman Sachs. We already had this today. I missed the Goldman Sachs trade. I got NVIDIA. I got Roku. I did not get the Goldman Sachs. We opened about flat, ran up and fell off that 324.25 level. And right now we're sitting at about 321. But if I can get a retest again and another fail, I'd be looking at these recent swing lows as my first target for half of my trade, the other half down at that 313 level.
All right, so we got cost. Okay, go ahead.
Sorry, no, go right ahead. What do you got?
I was just recapping. We looked at Costco, Adobe.
So we got Apple was the first one. Not my favorite though. Adobe. We got Costco and Goldman Sachs so far. I got 2 more if you've got the time for them.
Yeah, let's do it. 2 more.
Okay. Home Depot is the next one. Same scenario. We have 8 and 21 moving average right near the fib line at 327.29 level. Press up a little bit and fail. We're looking at ultimately 318.5, but I'm going to focus on this midpoint right here and just somewhere above that. Maybe 323 is where I'll take my first exit on this setup. And then Meta, again, not my favorite. This one needs to break the 287.56. Retest and fail, and we're looking at about 281 is our support level on Meta. So we've got 5 or 6 really good candidates out there that have great potential.
Yeah, and so what I noticed you're doing, you use the black and white candlesticks. What charting software is this?
This is a charting software that we offer. It's called Omega Charts.
Okay.
I love the crisp engine in it. I still use TradeStation. I'll never stop using some kind of platform like that. But this engine, from a functionality of what I can filter and scan for, I can build a filter route on this in seconds, where it'll find every stock that's between 50 and 100, a million volume, weekly optionable shares, wildest average true range of 3 or greater, and the MACD is up above the center line. I mean, you can do that in literally under a minute.
There you go. All right, Rob. Well, thanks for coming on. It's always great to have you come on and talk your charts. We'll have to talk some more about some specific options, trades, and spreads next week. If you guys want more from Rob, make sure to hit this website. It is tradewithrob.com. I'll go ahead and post that website in the chat.
I appreciate it, Aaron. Hey, have a great week. Glad we were able to connect, and I'll talk to you soon.
Awesome, Rob. Have a great weekend.
All right. Take care, everybody.
All right, guys. Tradinglikeaboss.com. Sending that in the chat. All you got to do is click that link if you want more from Rob and Wealth Builders HQ. All right, guys. Let's bring Nick back on the show. So we've got about 10 minutes left. Run through some more headlines with Nick before we get on with the rest of our Thursday. Nick Brown, how you doing?
Good, Ryan. I was going to say, if you could throw up a chart of Disney, I don't think we've ever seen Disney like this.
Wait, now
Disney
you're calling me Ryan?
within pennies of a fresh post-COVID low, and Disney shares haven't closed lower than $84 since October 17th, 2014. So, yes, we are below 87 or 84 right now. We're at 83.37. This will be the first close below 84 for the first time since October 17th, 2014. That's according to Dow Jones market data. So just watch Disney. We've known that they've had some problems regarding that the parks are empty. Other than that, COVID, you can see the big spike during COVID, and now it's coming back down.
Yeah, I mean, I remember specifically, during this run in COVID when Disney got up to $200 a share, thinking to myself, why did I not buy Disney when it got down to $83 a share? I mean, it's such a famous company. It's such a big name that, like, I know it's not going anywhere, but now it's right back down to where it was, and I don't really want it. I think there's a lot of problems, like you said, whether it's with the parks. Here's the thing. I don't know. There's always going to be demand for Disney's parks to go spend thousands of dollars, bring your family there, whatever. But like at some point, stuff like that to me is always going to hit a point where like it's just not worth it, where lines are too long, it's too expensive, too hard to book, and too crowded, like all these things. And I feel like we've hit to that point where it's people are just not as like enthralled by the idea of taking their family to Disney as they may have been even 3-4 years ago. You have a lot of different options out there for different types of vacations and places you can bring your family for entertainment. Disney Plus has started to slow down in terms of the streaming with other competitors coming in. So, I don't know. Just I'm not a big fan of Disney right here, the stock. I do think, there's a good chance that 6 months, a year from now, we'll look at this chart and say, hey, we probably should have been buying down there at $80. But right now, right this second, I don't really
It's just not good. I'd stay away from it.
Yeah, exactly.
I was going to say, we have another one. If you could throw up a chart of T-Mobile, they announced today that they're going to cut about 5,000 jobs. That's about 7% total. They says that management doesn't anticipate another round of widespread layoffs for the foreseeable future following the action. Most of the cuts will take place in corporate back office, along with some technology roles. Basically, company reiterates their fiscal 23 guidance previously issued. However, and Vital Knowledge, Adam Crisafulli points this out, quote, however, it is clear that doing everything we are doing and just doing it faster is not enough to deliver on these changing customer expectations going forward. That was a comment from T-Mobile. But you can take a look at their chart, and not really, overall good as well. We've seen a lot of these issues with a lot of the phone providers, T-Mobile, AT&T, Verizon, even Comcast too. It's just everybody wants a deal, a package for something, and maybe Disney Plus, maybe you can get Disney Plus 6 months for free if you buy a new phone or if you upgrade through Verizon, or I don't know if there's any deals like that out there, but we've seen a lot of the streaming services and a lot of the phone providers just not really doing so well that everybody thought they would. I mean, I have Verizon as my phone provider. It's great. I mean, I'm not going to be changing anytime soon. But, T-Mobile here, stay away from it. Doesn't look good either.
Yeah, I mean, it's interesting. You look at T-Mobile's chart here. I mean, you look at the overview and Benzinga Pro enterprise value it says 260 billion, but it's only trading at 160 billion, which, I mean, if you're like an extreme value hunter and that attracts you, sure, to me, if anything, that's a red flag. And I'm like, okay, why is this thing trading so far below its enterprise value? All right, Nick, we've got time for about two more headlines or charts if you want to check them out.
I was going to say, throw up a chart of Goldman Sachs. Goldman Sachs is cracking down on return to the office work. Bloomberg reported just this week that management and CEO David Solomon is trying to crack down on summer Fridays. They want a crew back in the office 5 days a week. I believe you're in the office every day, AB. Is that correct? Right? You're in the office every day, right?
Yeah, man. You can find me here every day.
I was going to say, I think our policy is if you live in the Detroit area, you have to be in the office 2 days a week. I think that's our policy. I'm not in Detroit or in anywhere that area, so it can't affect me because I'm in Pennsylvania. But it just goes to show that more companies are cracking down on summer Fridays. Maybe a 4-day work week is going to be the new thing. I don't know if the office is busy on a Monday compared to a Friday. My guess is the office is probably empty on a Friday at Benzinga, like everywhere else.
Yeah, pretty empty on Fridays here. I mean, like, it's okay. I understand cracking down on remote work or wanting people to bring back in the office. I do fully this might be my most boomer take, but I do think, and not for everyone, and not for, especially depending on what your job is. If you're like a developer who works better alone and you can write more code in alone than if you're not in the office getting distracted with people, sure, you might work better working remote. But I think for most people are more productive in an office setting than at home for an 8-hour period. And that
Not
might
me.
be my most, not you, I know you're a machine though, but that might be my most boomer take. But I feel like cracking down on summer Fridays, like as a specific thing, is pretty silly for a number of different reasons. Because without looking at any data, I would venture to say Friday is already probably the most least productive, day of the week in terms of work for workers across America. The summer is probably the most least productive season out of any of the seasons across the board for workers across America. So if you're already not getting that much done on Fridays during the summer anyway, then like who cares if someone works remote or is not in the office for just those Fridays during that 3 months, and ends up whatever. That's and by the way, like Europe, like these European companies and workers, like they take like whole months off in the summer and don't work at all. So I don't think people taking like one day to work remote out of the week is like a big deal. So if I were the CEO of a major company like Goldman Sachs, I'd be working on creating some sort of guidelines of working in the office, figuring out productivity, all these things, but specifically talking about summer Fridays. I mean, come on, like, who cares?
I just know for me, the office wouldn't work because I'm a people talker. I like to talk to people. So, I mean, I could probably talk to you. We'd probably get work done, but everywhere else, I'm just better at home then.
MD, is this true? Do you got like a news article about this? That's fascinating. I'm racking my brain right now to try to think of any potential explanations. I mean, like 8:23, do people go out the night before?
I don't go out any other the week. I stay home.
Well, yeah, you're also like 16. So, all right. What are the mandate masks again next? I mean, Kevin, I haven't heard anyone talking about any mask mandates or anything like that in like years. I feel like at this point, the only people still talking about that stuff are people that like want to complain about it, because I certainly haven't heard of any, I mean, shoot, you can do anything, or airport, fly, bar, whatever. Like I legitimately couldn't tell you. Actually, maybe I could tell you the last time I put on a mask was when, maybe I could. I went to a doctor's office or a hospital maybe not too long ago in the last like 6 months where I feel like they made me put on a mask. But actually, interestingly enough, I was on the plane when they like the FDA, or not the FDA, the TSA or whatever, airline, whatever, the travel agency like took away the mask mandate while we were on the planes, and it was pretty fun because everyone took theirs off and cheered and clapped and everything. But again, I haven't heard that was the last time I wore a mask outside of a doctor's or medical setting, and that was, I want to say, April of 2022. So that was like a year and a half ago.
I was going to say, I do know there's an uptick. There's reports of an uptick as we head into the winter. A new booster shot's going to be available. They're talking about some new variants. Reuters reported that, I believe, yesterday. It's going to be something we're going to have to deal with, just like the flu, just like the common cold. We're going to have to deal with COVID, and the people that may not be able to get the shots, may have to wear a mask for a while. And I think we're just going to have to adopt to that. Is maybe wearing a mask when it's flu season, just so you're not getting sick and the germs aren't spreading. But also, if you are sick, you just stay home. You just say, hey, I'm going to work remote for the day if you can. And instead of going into the office with a mask and trying to spread your disease all over to wherever you work at.
Yeah. I didn't really know that there has been an uptick in, well, maybe I did like see this. I just didn't but I mean, putting some like perspective into it, like looking at the chart right here, there's this recent uptick in the past couple weeks, but this is an uptick from like the lowest amount of new hospital admissions that we've had in the past like 3 years. So if you go back to August 12th, all right, so this is August 12th, 2023, new hospital admissions, 12,000. And you go back to like that same date last year, August, let's try to get as close as we can, August 13th, 2022, that was 40,000. So almost 4 times as many the same time last year as this year. So even if we see this increase, like I don't think it's going to be that significant. So, all right, Nick, good show today. Thanks for hopping on. I know this will be your last day for a while, correct, as you go back into school.
Thanks, AB, for a great summer. Can't wait to do it again soon.
Yeah, I mean, I'm sure you'll have like a fall break or something at some point, and then we'll get you back on. But as always, thanks for coming on, Nick. Great job this summer. Smash the like, everyone, for Nick. Please follow him on Twitter, News by Nick. Again, just doing some incredible things. Nick, just keep at it. You're doing great. You're only gonna get better. So hope your school year starts well. Your semester starts well. I know we'll still be talking. You'll still be working, doing some articles, some things, some tweets and whatnot for Benzinga. But again, we'll have to get you back on the show whenever you can.
Yes, thanks.
Of course. All right, guys. Let's go ahead and wrap up the show today. Please smash the like if you have not already. We'll be back. Again, more content later in the afternoon. Give us a follow on all the different socials, TikTok, YouTube, Instagram, you name it. We're there. Be there, be square. Peace and love, y'all. Give me a follow on Twitter. It's up there somewhere, at AaronBree5 on Twitter. Peace.